Okie dokie. Okie dokie, everyone. Can I just start off by saying either a very good morning or a very good afternoon or even a very good evening, depending on where you are around the world. Welcome and thank you for joining me tonight on tonight's latest episode of the Discover Trading series. I think this is episode 9 now, I think. Written by myself, obviously for Wise Bank. Now, tonight's episode is called Discover Price Action and Naked Trading. Written by myself, which is James Alexander, and I'm the market analyst here at Wise Bank. Now, let me give you a brief introduction of myself. Like I said, my name is James Alexander. I'm the chief market analyst here at Wise Bank. I have over 20 years experience in the financial service industry. I actually started off as a mortgage broker at a young age of 18. And the mortgages I specialized in was for commercial property buy to let. I then moved into pensions and unit trusts and other alternative investments before getting into the online trading arena around about 13 years ago. I've traded myself for several companies, ran several trading floors around the world, and specialized in portfolio management before moving into education. This is what I do now. I'm indeed a published writer and been published in several leading industry publications, including the likes of the Financial Times Advisor, Market Watch, and several other trade magazines and newspapers. I'm an avid market commentator, very passionate about this market and this marketplace, very passionate indeed. And often I'm asked about my opinion on where the market may be going and what to look out for. And I'm a well-known public speaker, and I've spoken at several industry events around the world, including the likes of Singapore, Dubai, Qatar, Kuwait, Saudi, Berlin, Frankfurt, London, obviously, and obviously more recently South Africa, Joburg, Pretoria, and Cape Town. Now, tonight's agenda, like I say, tonight's episode is Discover Price Action and Naked Trading Part 1. This is Part 1 because, like I say, when I try and do these webinar episodes, I try and, in short little bite-sized pieces. A, because it's easier to digest, and B, you won't get bored of me straight away, So we do it in 2 parts. But this is Part 1, and tonight's agenda, this is what we're going to be covering. We'll be covering what actually price action actually is. We'll be discussing naked trading versus overly clothed trading, how to trade with price action, and then, of course, we'll talk about future educational events and the usual question and answer session at the end. So, what is price action? What actually is price action? Price action is a method of trading where you actually trade off the price of an asset. That sounds very good, Mr. Alexander. What does that actually mean? Well, unlike using many indicators which can cover your chart and really blind you to what is happening, you in fact trade on what you can actually see, what or where the buyers and sellers are actually doing. Because let's face it, it's the buyers and sellers at the end of the day which really drives prices. Okay, if you have a good number of buyers, bigger number than buyers than you do sellers, then obviously that pushes the price higher. If you have a greater number of sellers than you do buyers, then potentially that can obviously move the price lower. Now, let's face it, we look at this. This is what price action is. This is when we look at our charts. We see up and down, 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 up and down. But straight away, it's showing us something. We can see something. Okay? We can see, let me get my pen here, by just looking at a chart, just with your naked eye. Okay, straight away, we can see where people are selling from. At the same time, by looking at our chart with our naked eye, we can see levels where people are buying from. So realistically, that chart without any indicators is straight away giving us information on what buyers and sellers are actually doing. Now, this is one of the things that many people make the mistake of, okay, when it comes to using technical analysis. And don't get me wrong, technical analysis has its place, okay? Technical analysis has its place in this market, okay? There are indicators which can be used and are extremely useful. But here's the danger, okay? A lot of people, they have their charts, then they add in, say, their Bollinger Bands, then they add in their moving averages and the MACD, and before you know it, instead of seeing, information or data being sent to you, what you're then looking at is practically a Jackson Pollock painting. It's blinding. There's just so much noise there. And all this data really isn't giving you, or potentially not giving you, a proper view of what is actually going on in the market. It's just too much. It's called a fully clothed chart. However, on the flip side, if you do what's known as a naked chart, you literally have nothing on it. But straight away, by taking away all that noise, that chart, by just looking at it, is telling you something. It's telling you something. By just looking at it with your naked eye, straight away, you can see levels where people have been been selling from. So straight away, you can see a potential resistance level. Same time, you can see levels where people have been buying from. So you know where potentially you can buy into the market. You can see other levels where people have been selling from and buying from. So straight away, by just looking at the chart without any indicators, okay, by just looking at it with your naked eye, you can already see, areas of interest. Because naked trading is a method of trading based purely on price action. What the price is doing, what the buyers and sellers are doing at the same time. Traders who trade this way tend to use very few, if not no indicators at all. And based upon the fact that, like I say, many indicators use price action as part of their calculations anyway, that this method of trading relies on yourself and yourself only to identify price action and areas of interest. You're taking the leap of faith with yourself. Now, here's some example. This is examples of using your naked eye. Okay, so here we have it. We have gold. Okay, gold on a 30-minute chart. Now, it's a good thing about price action is you can actually use it straight away for pretty much, any time frame. Okay, any time frame. Obviously, the longer the better, the more accurate the vision and the picture is. So straight away, just looking at a naked chart, bang, we can see levels of where people are selling from. So we know where our resistance is. So those are the levels we know there. Okay, so we know straight away we can see a level and areas of interest. We can also straight away see like a range, see where levels of people have been buying in from. Okay, so we know where the buyers are, we know where the sellers are. And as we all know, when a support is broken, it often switches its role and becomes a resistance. And straight away, that level there, we can see, indeed, it swapped its role. With our naked eye, we can see a resistance. We can see where the market has been selling from. And again, we can see where the market is selling from there as well as a resistance. So again, this is all with our naked eye. We don't need these indicators to see it. We can see it ourselves by just simply looking at the chart and identifying with our naked eye where the buyers and sellers are. Let's look at another example. This is the it's a Canadian dollar, I think it is. Actually, I forgot what it is. Right. Another thing about using your naked eye, don't forget we look at ranges, but you can also use your naked eye to identify if a currency pair or a commodity or an asset is on an uptrend or a downtrend. Really, James? How can I do that? Usually we use moving averages to do that, or we use Bollinger Bands to try and see that. But you can do it with your naked eye. Now, remember the rules of an uptrend and a downtrend. Uptrend, 2 higher highs and 2 lower lows. Downtrend, 2 lower highs and 2 lower lows. So let's have a look at this chart here. Okay. So can we see if this asset is on an uptrend or a downtrend without using any indicators, just using our naked eye? Let's have a look. Okay, there's a high. There's a low. This is where it's consolidated. So we can see the buyers and sellers there are consolidated and buying in there. But then we see a lower high. And then we see a lower low. Then we see a lower low again, lower high, lower low, lower high. So straight away, by using our naked eye, we can see that this asset is on a downtrend. Same time, we can also see levels of interest. You see there's another lower high there as well. Let's look at another example. This is the DAX. So using your naked eye, straight away, can you see if this is on an uptrend or a downtrend? High, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So straight away, using our naked eye, we can see that the DAX on a daily chart currently is in a downtrend. We can act accordingly. Now, this I will cover a lot more, obviously, in part 2 of price action. But one of the other ways of identifying price action and how to move in the market is using candlestick patterns. And this is going to be a brief introduction on a couple of patterns, okay? Now, one candlestick pattern is called the hammer and inverted hammer. A hammer is known as a bullish reversal pattern. So traders look for these patterns. So, they believe if they see this pattern, it then potentially indicates that the downtrend is finished. And this is what a hammer looks like. You've got a small body and a long wick at the bottom. Okay, so it looks like a little bit like a hammer. An inverted hammer, again, has a small body, but this time the wick is above it. So, again, using your naked eye, because you don't use indicators to identify candlestick patterns, you use your naked eye to see them. Let's have a look here. Now, this example, this is the euro dollar. So, using our naked eye, we can see a channel there. Then, we can see a hammer. Now, remember, like I say, the hammer pattern forms at an end of a downtrend and indicates that something is moving higher. So as we can see here, the euro dollar was on a downtrend, downtrend. Then the hammer pattern formed, and look, the market then reversed. And as we then see, we saw it consolidate. We saw the high, low, high, high, low, high, low, bang. Okay, so then we saw in that period of time, using our naked eye, it then went on a downtrend. And then, of course, obviously, then it broke a little bit higher. So that downtrend then finished, and it then became more of a range again. And then a low high. Here's another pattern. This is called the Morningstar. Again, this is using your naked eye. This is a 3 candlestick pattern. Okay, and it consists of one bearish candle, a smaller bullish candle, followed by a larger bullish candle. It looks like this. So you've got your bearish candle, then you've got your small bullish candle, and then your larger bullish candle. Now, again, trader looks for these patterns to try and recognize, again, a potential bullish reversal. So again, This occurs at an end of a downtrend. So let's have a look. Again, using our naked eye. Now, this is the euro pound sterling. There, using naked eye, we're seeing consolidated. This on a 15-minute chart. Seeing consolidating, so we see where the level of buyers are and where the level of sellers are. We then see where people are selling from when it breaks below it. So again, the support becomes the resistance. Again, we can see that with our naked eye. Then again, we see another level of where the people are selling from. So we see where the sellers are actually on move to. And we can then see the trend as well. So high, low, high, low, high, high, low. So we then know that currently around this stage, using our naked eye, the euro sterling was on a downtrend. But then, there you go. The Morningstar Pattern happened. And guess what happened? The market then went on a bullish reversal. Remember, bearish, bullish, more bullish. Ended the reversal of the downtrend there. Again, this is all simply using our own eyes to identify these patterns, identify why buyers are, identify where the sellers are, and identifying these patterns. Now, up-and-coming educational events. On the 13th of December, we have Discover the RSI and other oscillators. Then, on the 20th of December, closing the month out, we have Discover WTI and Brent, which is a case study on those two types of oil. Very exciting stuff. If you wish to reach out and talk to me, have any questions or any suggestions of future subjects, please feel free to email me at james.t@wisebank.com, or you can follow me on my Twitter account, which is at JamesAlexanderT. And on my Twitter account, like I say, it's quite new, but I do share chart patterns, things I'm seeing, and market updates. So please feel free to follow me there on Twitter. So, any questions, please feel free to email me or contact me on Twitter. Do not hold back with any suggestions or maybe even opinions on this webinar if you want me to cover more subjects. Don't forget, in January, I will be doing part 2 on this, part 2 of price action. And in part 2, I will cover a lot more candlestick patterns, etc. So, till then, can I wish every single one of you, depending where you are around the world, either a good morning, good afternoon, or even a good evening, like I say, depending on where you are around the world. Till next week, can I wish every single one of you a fantastic day, and all of you trade safe.